What's up, everybody? Michael Silva here. We are going to be doing some technical analysis for the SP 500. We are looking at the SPX, which is the SP 500 index. We're going to be looking at the daily time frame and the 30-minute time frame, plotting out some resistance and supports and kind of just getting a good overall idea of where I think that the market might be heading. Today's Monday, June 15th. Let's get into it. All right. If it is your first time watching my videos, welcome to my channel. I do these S&P 500 analysis videos every single day, Monday through Friday. I also throw up my weekly watch list on Saturdays called the Weekly Scan. And then I also, every once in a while, throw up a quick tip video, which I haven't for a minute, and I plan on doing it. I was planning on doing it today, but I went golfing today, so, I'm getting this video out a little bit later than usual. I got super burnt, and I suck at golf, so I probably won't be golfing for a while from now. All right, let's go ahead and hop into this technical analysis. We are on the daily time frame looking at the S&P 500. Question on everyone's mind is the market going to go higher or is it going to go lower? I feel like that's the question on everyone's mind all the time with the stock market. Let's talk about current price action of what's taking place. Obviously, we had a big panic day right here. That was June 11th. All right, and then since that point, we've been saying typically when you get a big pullback or even when it stretches out, like goes to the upside, you get some sort of retracement. And what we saw here was that kind of rubber band slingshot down, and then it gapped up that day, and then the next day, and then kind of been trailing sideways ever since. Today's price action was quite interesting. Today, the market gapped down pretty aggressively down to that $3,000 range and then pushed itself a little bit lower, but then moved itself higher throughout the day. And you're going to notice why that took place on the 30-minute time frame once we get into it. So really the pattern that's forming right now at this specific moment is a bear flag. Now, context. Context is very important. A bear flag would indicate, hey, that means the price is going to break down and head lower. Correct. That is true. But when you think of the context of the overall chart, look at what's taking place. If you look where the bear flag is, look right below it, and you notice that there's all this price action right in this range. You have the 61% retracement level. All these black lines right here is the Fibonacci retracement level. Okay, that's just a quick little tool that I like to use to gather support and resistance levels. And as you can see, it acted as resistance here, and then it broke above it and tried to break back down below it, but then it acted as support basically through this range. So if you look back even farther on the chart, you can see that the price got caught up all within this range too and just above it. So really what I'm seeing here, the context of this bear flag is in bullish context. So you have a bear pattern in bullish context. And if you put the ideals in either favor, the bears or the bulls, who, would this break down? I mean, it's always a possibility, but it has a lot of work to do, especially where it's kind of on this map, to break through lower to these levels. Okay, so me personally, I think we're going to see some more sideways action potentially, and then it's going to be coiling itself up for a larger move. And I do feel like the market would be potentially heading higher because I still think the market wants to test its February highs back here at basically 3,400, let's call it for rounding purposes. Now, I'm not talking in terms of certainty. I'm talking in terms of just technical analysis. And as you got to understand, sometimes patterns fail. Sometimes things go one way or the other because could be something that happens within the market, the news, something could take place. But from what I see is some very choppy action, some very big gaps, and the volatility is really picking up. And we talked about this up here actually when we started talking about this kind of reversal pattern that took place, this island reversal, or this I just call it clouds in the sky. You can call it whatever the hell you want. I say that every video. I don't really care. So what do I think is going to happen? Well, I think if the price continues to move sideways a little bit, it's kind of, in my eyes, building a base to head a little bit higher. And I think it might want to close that window where it kind of broke through, which was that 3180, let's call it. 3180, and then it obviously gapped down to about the 78% retracement level of 31 30, let's call it. So right now it's still in this consolidation phase, even though you're seeing this market like move up and then move down. But really what we need to look at right now is the 30-minute time frame to get a good sense as to where we might be heading here shortly. So let's go ahead to the 30-minute time frame. All right, so we are here at the 30-minute time frame. I'm going to go ahead and clear these blue lines off the chart. That's from the daily that we just had. And first I want to talk about today's price action, and then we're going to map out some support and resistance areas that are going to be important to keep an eye on heading into tomorrow. Now the market opened up a big gap down. So now yesterday, June 12th, the market closed right up in this range right here at 30.40. And then what we saw was a gap down to 29.93. Now, this gapped below the 3,000 range and started pushing lower and lower. And then before the 30-minute candle was up, this was one big red candle, if you can imagine, a very bearish, scary looking candle, and it probably trapped a lot of traders. Like probably a lot of traders, you know, were either hitting stop losses or other specific things that could take place. That's a very nasty looking candle, and if they waited long enough, it formed a perfect reversal candle, okay, a hammer candle. And clearly, as you can see, the price started moving itself higher. Now, the high of the yesterday's last candle, we actually drew out as an area of resistance just yesterday. Now, I'm going to make it green for right now, and I'll tell you why, is because the price action's above it. But in today, as you notice, the price moved up, and this is why I love technical analysis. This is why I love charts. It actually got rejected at the 2050 level right here, or 3050. I'm going to call it 3050 for rounding purposes. It's actually at 3048. Got rejected. Then the next candle moved lower, and that was the 30-minute, full 30 minutes right there that formed. So it was 30 minutes below that level. It was acting as resistance at that time. And then it's sideways action, boom, bursted through it. And, you know, within the last couple hours of the day, it moved itself from 3038 to a high of 3080. Now, this is what I find interesting about these levels that we drew out, okay? The areas that we drew out for resistance, one of them got taken out, and the other one now, the other one now is still active. So we drew it out right here as a resistance yesterday, and as of right this moment, that is still the area of resistance we need to keep an eye on. So 3080 for rounding purposes, let's call it. 3080 is still an area of resistance, and as you can see, the reason why is because the price action came down, acted as support right here, and then when it broke down, it really broke down. Okay, then it bounced, the price bounced up, it got rejected from this line, moved all the way down, and then now it came all the way back up and got rejected again. The ending candle on the 30-minute time frame is somewhat of a hammer candle. So this actually is very interesting. It actually, the price action has created this pole, and then it's consolidating sideways. So this is actually somewhat of a bear flag on the 30-minute time frame, which means that it's a very possible action to see this resistance broken tomorrow, potentially. We'll see, and then turn into some sort of support. So what do we have going as far as support and resistance? Well, I say it's more of a range per usual. I always call it a range because it typically is. But we have this 3100 down to about 3080 is the area of resistance, the zone that tomorrow is going to probably try to fight with. As you can see, this now is our area of support. It was resistance yesterday. We're going to call it 3050. Okay, and then the next level, what you do to look for it, I'm looking at this live, I would say, gosh, it's a zone. So really I would say 3025, I guess, would be the next area of support. So let's go ahead and make that green. And now the reason why I say that is because you see the price came down here and went to try to test back up on it right here. Then it came down and then came back up to try to test on it again. And then it just obviously gapped up. This candle closed here, and you could see the price action interact with this level. It acted as support, then finally broke through. It acted as resistance, then broke through, then gapped down, and then it acted as resistance right here. So this 3020, I'm just going to call it 3025 for rounding purposes to 3050. That is going to be the area of support. It's a very tight range between the two, and I do think that tomorrow we'll see some action, and we're probably going to get out of these ranges here in the very short future. I'd be shocked to see it just move sideways within this channel and get bounce back and forth, especially when we've been seeing these pretty aggressive gap ups and gap downs. Like this one was a pretty aggressive one. Open, close, and then open. Yeah, so basically this one right here was also a very aggressive one. So we, this was a gap up, and then the price went down, it moved up, and then this one was a gap down, and the price went up. So a gap up, price went down. A gap down, the price went up. Very interesting, some very volatile times. Overall, it's just trending sideways in that channel that we looked at the daily time frame. So yeah, I mean, we just got to be patient. As far as right now, there's no clear indication, obviously, where it wants to go. I still think that it's a bear pattern, but in bullish context. So it's gonna take a lot from the bears to really push this price lower. I still think that the market wants to potentially push itself just a tad bit higher here. So, but we'll see. We will see. It's a crazy time to be a part of the markets right now. So that's all I really have for you today. I will see you back here tomorrow on the S&P 500 technical analysis. See you later.